good morning, good afternoon, everyone. This is Rob Barnett, and I'd like to welcome you to today's BI Energy Exchange, where we talk about our research and the latest developments in energy markets. We've got a little bit of a special lens for how we're going to think about the discussion today. So just quickly, let me introduce. So we've got Salih Yilmaz, who normally joins us from Dubai, but this week he is in Qatar for the Economic Forum that's taking place there, big event, and I think he's going to give us a readout of the discussion that's happening there. Swinging over to Madrid, we've got Patricio Alvarez joining from his new permanent perch there. And so, Salih, we're going to kick off with you. I've been watching the headlines come across the terminal. Very interesting series of discussions have been taking place there. So I just want to get a sense from you. What's the vibe like? Is geopolitics part of the discussion? Is energy part of the discussion? What are you hearing from all of the activity that's taking place there?
Sure. Thanks, Rob. Thanks for letting me join for QEF this week. So, I mean, as you say, and not so surprisingly, I mean, geopolitics has been the major theme in the first 2 days of the conference. Of course, the Israel-Hamas conflict, also Russia-Ukraine, and also the Cold War, if you will, between US and China have been dominating a lot of the sessions yesterday and today. Of course, the uncertainty, especially, I mean, this being in Qatar, the uncertainty around the Middle East conflict, and what risk, but a very dangerous one. So we had, and I mean, I've talked on this call before on the deep dive on the long report that recently published in collaboration with Bloomberg Economics. So we had a session on that earlier today, discussing the 4 different scenarios that we've been using as our framework, and the impact on oil, the impact on OPEC plus policy, the impact on global GDP and inflation in all scenarios. We went through that together with our colleague Ziad Daoud from Bloomberg Economics. So just a reminder that this long deep dive report is available on the terminal. We also have some hard copies that we've been distributing here at the event. So just a very quick plug that is available. And if anyone is interested and can't find it or would like a hard copy, you can get in touch with any of us and we'll get that to you. And also, I mean, if you're a terminal user, we've had a T-Live blog since the beginning of the conference. That's probably the best way to follow everything and to see a pretty good summary of every session that we've had yesterday and today. And there is a Qatar Economic Forum YouTube channel where they're uploading all the clips from each session on there as well. So I don't want to talk for too long, but I think what was interesting and what made me take a lot of notes was a couple of things. I think the Citadel CEO, Ken Griffin, had a talk yesterday, and he had some comments on EVs and LNG permits, which I'm happy to share in a bit with you. And of course, this morning we had a panel with the Qatari Energy Minister, the TotalEnergies CEO, and Exxon CEO. And that was a session where I was taking an interesting bit from Ken Griffin's session yesterday was, I mean, essentially slammed the suspicion when he was asked about EVs and said the moves to hike tariffs on Chinese EVs. And he also added the decision to pause new LNG permits were part of an incoherent policy by the administration, which I thought was quite striking. And I'd love to hear kind of your input on that, of course, or Patricio's input on that. But from today's discussion on the Qatari Energy Minister, head of Qatar Energy, Patrick from TotalEnergies and Darren Woods from Exxon. I mean, generally pretty bullish tone. I think as you would expect, not only on oil, but of course there was a lot of focus on gas because I mean these two companies have been key in Qatar's development of its LNG sector. And again, I mean, I think you can always argue that they're talking their books, but I think the Qatari energy minister said last year he joined this conference as well, and there was some discussion around whether all that expansion that they were planning to bring, whether they would be finding enough customers, whether they could be finding enough demand for it. And he said 1 year on, demand for LNG is looking stronger than ever. I mean, I made a lot of notes, but I will try and share some of the key ones I thought as the discussion went on. I think on LNG, Patrick said that gas is definitely a transition fuel and will address the intermittency of renewables. I mean, connected to the question was another part of the question was about whether there will be a glut of LNG, whether there will be an oversupply of LNG, especially between 2027 to 2030. There was some discussion, there might be, but if there is and prices go down, he said that's not such a bad thing necessarily because then it would attract even more new customers. And he just kind of highlighted that there is a clear place for gas in transition, because I know we've talked on this call quite a few times about whether natural gas is a bridge fuel or not. And I think all three CEOs reiterated their confidence in that. And then Darren Woods reiterated similar points, echoed similar points, and I think had another point on the energy trilemma that we always talk about. It just kind of said we need to have energy sources that are reliable, accessible, and affordable for everyone. Which is, again, I feel like every conference I go to, it just goes around and keeps going back to this energy trilemma of having, reliability, accessibility, and then sustainability. I thought another point by Priani was another interesting point by Priani was that it will be, there was some disparity, and it will be demand side when it comes to oil or natural gas or LNG that will dictate the transition and not supply, which is, again, something that we've heard before. And then Darren Woods added that what we've been seeing perhaps in the last year or so, perhaps since the energy crisis in Europe, was that there's been more realism that's been brought into the discussion, and that perhaps we have narrowed our solution set. There was some discussion energy question too soon, and he said that a lot of solutions are required. It will be through innovation and just competitive technologies that will drive lower emissions. And then there was some discussion. Minister said that when it comes to some of these promises, I mean, I think that there were a couple of questions around COP 27, COP 28, and whether we are on track to deliver some of these promises. And said no, that usually tends to be the politicians that make these promises, but then some of them might sometimes be not realistic, and then later on reality might kick in, and some of these targets quite overstretched. And finally, I thought it was quite interesting, and there were a couple of articles on this in the last few weeks. On TotalEnergies, there was a question about whether they are in fact considering a US listing. And I thought what was striking was that he didn't say no right away. It looked like, that they really are studying this option. And he said, this is not going to be a political decision for them. It's going to be a business one. And he said, no emotion involved in the decision making in this specific instance. And he said, they do have a lot of U.S. shareholders now, and he did mention that the U.S. majors, the U.S. Companies, oil and gas companies, do tend to, demand better valuation, which seems to be quite attractive for them. So again, this was a long discussion. These were the things that I thought were key from that panel specifically. Sorry if I went a little bit over, but those were my notes from that session.
Fantastic. Thank you, Salih. I think that's a fascinating series of discussions, it sounds like. And so I'm going to kick it over to Pat, and I just want to get, Patricio, your reaction to the idea that Salih just mentioned about robust LNG demand growth. That sounds like that was almost a universal thought there. And Europe has really been a key LNG import market, but when I hear you talk about it, I always get the sense that maybe European demand's cooling. And so you give us a sense, where's Europe at on the gas side? How important is LNG? How do you frame it in the global context of kind of what you're hearing Salih describe?
Sure. So I think it will depend on which conference you go to when you talk about the discussion of sort of the long-term trend for gas demand. I think in Europe, it's a special case. Europe is still one of the largest consumers of LNG globally. And since Russia's curtailment of pipe flows, Europe still or is increasingly relying on LNG. This year, by the end of this year, LNG will represent nearly 40% of the EU 27's supply mix. So it's basically already displaced the pre-war levels of Russian pipe flows, which is key, I think, because it also augments exposure to gas price volatility, because it means that the region has to compete for spare cargoes with other regions. But that said, I think it's important to note that gas demand is still down by about 18% relative to 2021. And it seems that there will be persistent trends that will impede gas demand to return to those levels. So according to our analysis, gas demand in Europe peaked at around 2005, and that's despite the gradual closure of coal plants in Europe as well. So that means that renewable power generation, which is gaining more and more a bigger share of the power mix here in Europe, is working in crimping the demand for gas and power, which is not surprisingly the section of demand that's been dropping the most, or where we see no signs of recovery in 2024. We've seen some early or weak signs of recovery in industrial demand, which has also dropped significantly. And as always, weather will be kind of a wild card. We've had 2 consecutive milder than average winters, which have also contributed to this period of lower demand. But that's it. I think to summarize, what we see in 2024 is demand recovering by about 1 to 2%, but still remaining roughly 15% below 2021 levels. In the global context, I think obviously Europe is sort of a special piece because of the supply dislocation with the Russia-Ukraine conflict. Most of the demand growth for LNG especially is expected to come from emerging economies, and mainly, well, not so emerging anymore, but China will be the largest driver of LNG growth, at least for the next 2 years or so. And well, that I think the longer view or the longer term view in China, it's still like up for grabs. In China, every source of energy, let's say demand for any source of energy is sort of growing. So it's hard for us to call it on that sense, but on that front. But I think definitely in Europe, gas demand has probably peaked.
Okay, very interesting. One of the things that I would have been curious to hear the panelists that you described, Salih, talk about is the concept of how LNG is going to get deployed. What's it going to be used for? So just looking at the screen right now, Henry Hub in the U.S. is $2 and change. TTF in Europe, if you did it in dollars per MMBTU, is over $9 per MMBTU. It makes incredible sense to pair natural gas with intermittent renewables when you've got Henry Hub prices. Cheap, nice synergies. When you're paying over $9 per MMBTU, which is, let's say that's roughly more aligned with the global gas price if it's whether it's in Asia or Europe. Do folks really think LNG is going to be used in extensively in the power sector, particularly when you're paying that kind of price premium? Or is the growth in LNG really being driven by industrial demand, other things? Do you have any sense of where you think about that? Was that at all part of the discussion?
Not directly, but one thing that Patricio was saying that, Total has been quite a big player in LNG, and they have actually been a pretty big, within the majors, a big player in renewables as well. And he was saying that, doing exactly that has been working quite well for them, that, more renewables, which is great, but then for the intermittency issues that everybody talks about, that and an issue that probably needs to be addressed, then you have a more reliable source. And of course, and also I think they did mention that the lower emission profile of natural gas has also been attractive for them. And of course, methane emissions have been an issue. But he also said in a separate question that, methane discussion has been one where, they have the technology to address it. So it just had to be clear guidance, all the kind of policymakers, taking it seriously, and then all the oil and gas companies working together with the policymakers, taking it seriously, monitoring it more closely, and then addressing it. And he said that at least for their operations, it's been working well. So he did say that one of the attractive points for natural gas and LNG for them in general is that it's going to help them lower their emissions profile as well. So that's from what I can recall, those were the points that they did mention on the topic.
I'm curious to hear your thoughts on the evolving discussion around the energy transition, the peak demand for certain fuels, these kinds of things. A couple of years ago, maybe 3-4 years ago, very in vogue. Anytime you got oil CEOs up on stage, they had to talk about these topics. My sense is that that's kind of fallen off the radar and maybe been more replaced by geopolitics. Is that kind of how you see it at the moment? Or is there still a lot of talk about energy transition? You did mention there was some discussion around the COP meetings.
No, the first question to them was about peak demand, actually. And it wasn't necessarily natural gas or oil. I think for for both of them, for both oil and gas. So it's still being asked. And, we always, whenever we do our surveys, we always love asking that question as well to our survey respondents. And it's always fascinating to see the results. And it's always fascinating to see how sentiment is it kind of shifts around. And in the last iteration that we did, the sentiment has shifted so that more and more people are expecting peak demand, at least for oil, not to come until later in the decade, perhaps early next decade. But what these CEOs were saying were that economic growth, which we are still expecting to see for the rest of this decade, of course, economic growth has been a big driver of energy demand, oil demand, and that what they're expecting to see is something similar. And on the energy transition discussion, there were a couple of questions, and as I mentioned earlier, it was very much around the promises are being made by the politicians, but there is the realism that perhaps is kicking in a little bit later on how, you probably cannot get rid of much of the oil demand overnight. Similarly with other fossil fuels demand. So generally, again, I think Kat made a really good point that it really depends on which conference you're at, and I think the answers that we got were the answers that you would have expected to get from three oil and gas company CEOs. But no, these questions are still being asked, and pretty much the same answers are being given.
All right. Well, one of the topics that I think is in the zeitgeist of the moment is AI, generative AI, LLMs, OpenAI, just down the list. All the big tech companies are really focused on this topic. Our colleagues from Bloomberg Intelligence, led by Mandeep Singh on the tech team, have done a deep dive, and basically, it's just off to the races. We're at the beginning of this AI revolution in their perspective in terms of spending and share of the economy and all of this. And Patricio and I, we can talk about it, but we started to really start to assess what all of this AI spending could mean for energy demand. And the numbers they're big. They're really kind of shocking, actually. And so I'm curious, was there any discussion amongst the energy folks tying into AI, or are they kind of living in separate silos there?
I mean, at least here, it looked like separate silos in the sense that, we had a couple of other sessions on AI. We didn't really have that energy discussion. On that panel specifically, there weren't really any questions on AI. But I should say that I think it was the BP earnings call last week where they did mention AI. And I think in that specific instance, it was around how AI is helping them kind of with their coding. And it's actually allowing them to realize some cost savings. Again, I wasn't on that earnings call, but I just saw our colleague Will mention it on the chat. But I was on the road, so I haven't actually had a chance to look at it. But I think it is something that's starting to come up even in oil major earnings calls as well, and in different shapes or forms, of course. But yeah, on that specific panel, there weren't really any questions or any discussion about AI.
Fascinating. I didn't go back and look more deeply, but I think that on the BP earnings call, they said something around 70% cost savings on third-party consultants who are doing coding for them as a result of AI, something along those lines. Patricio, let's come over to you. We're going to talk our own book a little bit here in terms of some work we've been doing, but help for anybody listening frame what's going on with AI and energy demand. And if you haven't seen it, both Patricio and I, just look either one of us up on bio. We've got 2 notes out on the topic, more coming. So subscribe to our feeds. You can read not only what we've got out now, but what's coming. So, but Patricio, give us some highlights. What are some of the big takeaways from kind of how you think about the AI spending revolution that's unfolding and what the read across is for energy?
Sure. So, like you mentioned, I think we started from what Mandeep and the global technology team at Bloomberg Intelligence did with their deep dive report that signaled that spending in cloud infrastructure could grow at about 41% compound growth annual rate to 2030. So we took that as a baseline of let's say how fast energy demand could grow if it was at all tethered to this growth in investment. And we obviously took different ranges of assumptions in terms of the correlations that could be present there. And our final assessment was around 4 to 10 times. So we expect that this section of power demand that is roughly at the moment roughly 2% of U.S. power demand, it could grow up to by 4 to 10 times by 2030, which means that it could represent up to 20% of power demand, which, as you said, is an enormous number. But I guess it's all reliant on the fact that all this cloud spending, all this spending in cloud infrastructure is going to take place, which I don't think is that far fetched. The likes of Google, Microsoft are spending billions in this, and it's not let's say it's not unlikely for spending on data centers to grow as well. I think on empirical evidence, I think it's important to also give some like data points that are quite interesting. We do think that this surge in power demand will be focalized, meaning that it doesn't mean that overall power demand will grow by more than a couple single digits. We still think maybe 1 to 2% per year overall. And this will be focalized, for example, in select states in the US, for example, Virginia, where data center power demand has grown over 500% over the last decade. And you can see that flow through into company earnings. For example, Dominion Energy has hiked up their 3-year spending plan 3 times in a row by more than 30% each time. And what we think that means for companies we covered, for example, I'm sorry to take a little bit from your side, Rob, but solar and batteries are obviously they are going to sell a lot more. Demand for those solutions are set to soar, we think. And that's on both fronts. So I cover European utilities, which very much buy the components that Rob's companies sell. So we see a lot of my companies spending more and more in solar and batteries, especially in the US. And that's because we think that data centers lend well to this type of solutions, given that there will be grid constraints. Usually regulated utilities have to go through very lengthy permitting processes to connect new assets to the grid. That also can face regulatory backlash because other ratepayers may not want to fund data center demand. So we think off-grid solutions, so batteries, solar, and onshore and offshore wind could be poised to gain over the long term. And that obviously has positive read across for demand for solar and wind manufacturers. And also I would say on the sideline, perhaps European utilities with exposure to the US.
Yeah, I'll just add that when we first started thinking about this topic, I kind of felt like the tech world was out to lunch. Maybe they didn't understand energy because I had seen some of these quotes from the CEO of ARM, a microchip company, said that data centers or AI could represent 20, even 25% of electricity demand. And I thought to myself, no way, this just doesn't make any sense. And as we looked at the topic, I think, that's just a sort of very sober assessment if you believe all of the spending that's going to take place. And it does seem like all of that's happening. It's not just theoretical. Look at all the CapEx announcements that are coming out. These are big, big numbers. And of course, new equipment, may get more efficient. So that's why we give a pretty big range. Is it going to grow 4x, 10x as if it's sort of a more linear relationship, and then it's still 4x if it's a much more assumed improvement in the power consumption per query or search, or however you want to think about it. And I think the really interesting thing for someone who's done this for a little while, a couple of decades, this U.S. power demand in the OECD generally has been pretty flattish, maybe even declining in some markets for some time. So the idea of the growth of any level is actually pretty stunning. And so I think anyone who hasn't thought about power markets, power demand in a while should really take a look at what the implications of AI could mean. And I'm absolutely with you there that solar and batteries seem to be an obvious solution at some level because there's a lot of talk about nuclear. Well, good luck with nuclear. It takes 10 years to build a facility. These tech companies think about this year, next year. I mean, they're sprinting. They're not thinking about 10 years in the future. And so I think nuclear is very difficult from that perspective. Not to say that we shouldn't do it. I think there's a lot of positive attributes to nuclear energy, nuclear power, but it's not something that you can just turn a switch on. And it's not that you can turn a switch on solar and batteries, but they are faster. And of course, as we were talking about earlier on the call, natural gas fits in very nicely with intermittent renewables. And I am seeing a lot of anecdotal evidence about gas connections being made at some of the data centers for part of backup power and tie-in. So I think there's a lot of interesting things, particularly across solar, batteries, and gas when you think about this topic. So Salih, we're really reaching the end of our time here, and I know you've got to run, but let's swing back around to you for kind of final comments on the forum and this AI discussion.
Yeah, I mean, there is a question in the Q&A chat, so maybe I can address that really quickly. So it's from Ken about, maybe Shell or BP it would maybe make more sense for them to list in the US because they have significant North America exposure, but Total is global. Would they truly benefit from a US listing? And I think this was more of a question of, I think what he said was that it's really the European environmental policies that perhaps are reducing the appetite for some of the investors in the continent for companies like Total, where they are just seeing increasing interest for just for their stock across the Atlantic. And, I mean, I think they do believe that, generally the US companies tend to be demanding a higher valuation, and they seem to think that they could benefit from that. So anyway, that's just wanted to address that very quickly. Other than that, I mean, I think geopolitics is still the big highlight of the conference, and of course, geopolitics is very much important for commodities, and especially for oil and gas from this region. So, of course, we all hope for potential ceasefire, which would, of course, reduce human cost of the conflict. But there is still obviously a lot of uncertainty around what happens next in the conflict. So there's one more day of QEF. I'll be here, and that's it from me.
Okay, thank you, Salih. Thank you, Patricio. Just a quick bit of advertising. One, BI has about 400 analysts globally. So if you want to go deeper on any of the AI stuff, I highly encourage you to check out our colleague Mandeep Singh. He's the lead analyst, kind of coordinating a lot on that. It's great stuff. They do podcasts and calls similar to that. So if that's something you want to go deep on, reach out to any of us if you have trouble finding it. But we're happy to make you aware of that. Continuing on the politics, policy, geopolitics discussion, if you're unaware, our colleague based in Washington, D.C., Nathan Dean, he's got a regular podcast. It's called Votes and Verdicts. Today, he's hosting Senator Durbin. So great guest, some big speakers there. So make sure to check that out. And the last bit of advertising that I would make is that for anyone who's based in New York or wants to come to New York, we have settled in on Wednesday, June 5th. We're going to have an in-person roundtable focused on energy and a lot of these topics we discussed here on this call later in that afternoon. I don't think we've quite agreed on the time, but it's going to be kind of 4:30 in the afternoon. So plan to join us for that event, just to say hello in person. I don't think Salih or Patricio is going to come over for it, but I'll be there. Will Harris will be there. He's coming over from London. Vince Piazza, Scott Levine, Talon Custer, they'll be joining from the New York and New York City sort of general area on that day. So we look forward to being in touch, and thank you for your time today. Hope you have a great rest of your week. Take care, guys.